Hello there and welcome to the weekly outlook. I'm going to be going through the economic calendar and just seeing which key events are going to be trading next week. In focus really is Antipodean currencies, the New Zealand dollar and the Aussie dollar, and the continuation of the downside to the euro at the moment. Okay, so we're going to start off by looking at the Aussie dollar. That's the first one out on the calendar, and that's on Tuesday, the NAB Business Confidence. Not expecting too much from that, so if the data comes in better and it gives the Aussie dollar a little bit of a chance to rally up, then we can look for sells again around about the 8,000 level. If it comes in poorer, then I expect the continuation to head down there. Later on in the week, we've got the CPI on Wednesday morning. That's expected to come in at 0.3. It was at 0.5 last time, so it's quarter on quarter. So expected to be slightly lower. This will cause the Aussie dollar to fall. Now, the interesting thing about the Aussie is coming into the 3rd of February, week after, we've got the RBA rate statement. Now, there's a lot of speculation about a rate cut going on at the moment, which is driving the Aussie dollar down, particularly now Canadian dollars cut their rates as well. The Aussie dollar is expected to follow suit. What we can expect to see up until then is the Aussie dollar to fall down to the 7-8 area. Okay, this is the area that I suggested would be a trading range for 2015. The RBA have recently come out with a new fair price for the Aussie dollar. They're suggesting that 9.5 is the price they would really like the Aussie dollar to be. What I expect to happen on the 3rd of February, you can see that I've got that there on the calendar, is it to drift down until the 3rd of February with the data that's coming out, i.e. the CPI that's out on Wednesday this week. And then for that, when that rate decision comes out, if rates are kept on hold, I'd expect the Aussie dollar to bounce back as a lot of the rate cut is priced into the market. If the rate cut happens, then I would expect the Aussie dollar to fall down to that price that the RBA wants it to be at the moment, which is 7.5. Okay, so that's what I'm expecting. I'm looking just to try and reach that target of 7.8 this week on the Aussie dollar, or just above. We may experience some pullback on the NAB Business Confidence, as I suggested, which really just gives us an opportunity to get back into the trade. The same with the CPI as well, although it's expected to come in lower, which would cause it to continue down. If it does come in slightly better, then we could see a pullback as well on that, but then it will continue down again. Okay, so moving on to the New Zealand dollar, which is the next currency pair that I'm going to be looking at this week. Looking at the New Zealand dollar, US dollar. Still weaker than the US dollar. At the moment, it has been falling off the back of what happened with the Canadian dollar, the rate cut, obviously commodity prices as well. Now, we've got the RBNZ rate statement and trade balance on Wednesday as well, Wednesday evening, and the official cash rate. Not that I'm expecting the official cash rate to change. In fact, on the contrary, I'm expecting it to be them to raise their rates at the end of 2015. But what I'm looking for in the immediate or the short term is for the RBNZ to try and talk the currency down to that fair Goldilocks price that they wanted, which was 65 cents to the dollar. Still about 1,000 pips away from that, although we have started to fall quite dramatically recently. Because the pressure's on the New Zealand dollar at the moment, I would imagine they will keep their cash rate the same, but they will try and talk the currency down by saying it's unsustainable and historically high at the moment. So they'll use the added pressure that's already on there due to the commodities to try and talk that down. So you expect to see further downside from the further downside from the New Zealand dollar. However, if they do hike rates, which is quite unlikely, or if they do have a slightly more hawkish tone, then we could see the New Zealand dollar rally back up to that 7-8 level. However, this would still be a selling opportunity against the US dollar for the time being. But I should imagine the RBNZ are going to try and take the most of this pressure and try and talk it down. Okay, that's Wednesday. Now let's go over to the euro. Euro is the final currency pair that I'm really looking at trading this week. The pressure is already on the euro from the QE on the 22nd. This was the QE announcement here. You can see it's had a dramatic fall. We had a decent sized pullback on Friday, which was a good place for us to enter that trade, and it's continued to fall since. Now we have got some data coming out on the euro. On Friday we've got CPI flash estimate year on year. Now this is expected to be slightly weaker again, which again adds pressure to the euro and instigates it to come down as well a little bit further. So 10 AM on Friday, I would expect the euro to push through that 11,000 mark. However, between now and then, we could see a little bit of consolidation between the price at the moment, between the 113 area and the 111 area. Okay, so taking sales off the top around about 113, and then he spikes up there above, and also I wouldn't be taking buys off the lower boundary, but certainly taking sales getting close to Friday off the top end of that boundary there. Okay, and that's all. I hope you can make some pips. I look forward to seeing you next week.